Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 22nd of November. ECB's Draghi says its ultra-loose policy needs to continue. ECB President Mario Draghi said that the return of inflation towards the bank's objective still relies on the continuation of the current unprecedented level of monetary support, in spite of the gradual closing of the output gap. These comments strengthen expectations for an extension of the bank's QE program beyond March 2017 at its next month gathering. The focus in the next few weeks is likely to turn on headlines or any comments with regards to possible modifications that the bank may also need to implement in order to extend the pool of eligible bonds it can purchase. With the current rules, the ECB can only buy debt that yields more than its deposit rate and is restricted on the amount of debt it can buy from a particular country, as well as the composition of assets it purchases. As a result, the bank needs to tweak its own rules to ensure its stimulus program continues to run and support a stable but lackluster Eurozone recovery. In the US, President-elect Donald Trump outlined his plans for his first day in office, including formally declaring his intent to withdraw from the Trans-Pacific Partnership trade deal and replace it with bilateral agreements. Even though this had no immediate market reaction, it eased USD gains a bit as it teared any hopes for a softer protectionist stance on international trade. The first international reaction came from Japan's PM Abe, who said that the TTP without the US is meaningless. Japan's head of state did not rule out a renegotiation of the agreement, but he noted that the TPP without the US will collapse the balance of benefit. The dollar strengthened significantly following Trump's promises of deregulation and fiscal spending. However, the currency may take a breather and correct lower for a while as investors focus on the possible consequences from cancelling the TPP deal. As for today's highlights, Tuesday is another light day with regards to market moving events. We get only second-tier economic indicators throughout the day. From Eurozone, we get the preliminary consumer confidence index for November, and expectations are for the index to have ticked up, but to remain well within the negative territory. In the US, existing home sales are forecast to have declined 0.5% month over month in October, after rising 3.2% in September. Given that housing starts for the same month surged 25.5%, we don't believe that a minor slide in existing home sales would be a sign of concern with regards to the US housing sector. As such, we don't expect this indicator to materially affect the greenback. The Richmond Fed Manufacturing Activity Index for November is also coming out. From Canada, we have retail sales for September. Headline sales are forecast to have rebounded after sliding somewhat the previous month. The core print is also expected to show a rise after staying flat. Following Friday's accelerating CPI for October and the positive headlines with regards to a deal at the OPEC meeting on the 30th of November, this may extend somewhat the Loonie's recent recovery. Nevertheless, we prefer not to trust any further strength in the Loonie, especially against its US counterpart. After all, Trump's threats to renegotiate or even scrap NAFTA increase the risks around Canada's exports, which leaves the Canadian dollar vulnerable. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.